Hey guys, Mike here. So this will be the first of the members videos I'm going to share with the public because remember I'm on vacation right now, sitting there hopefully in a redwood forest as we speak right now with my family, having fun. And so again, I'm taking the most, I won't say popular, but what I think is the most important members videos I put out because I like to do research. Some of those you request, they request, whatever. But things you can use for the rest of your life, which will either save you a lot of money, make you a lot of money, all that good stuff. And so what do we have coming up? I thought this would be the most important. We have August, we have the end of July, and then August and September, of course, which is the worst month of the stock market in the history, okay? Now understand, I don't care about history as far as pre-2000, and so I did a video, I showed the public this about, if I didn't, I'm actually gonna put it out this week as well, but sell a man, go away is total not true, okay? That has changed. I've showed it so many times, but we're going over the last like 10, 11 years so you can see it. All right, why are we going the last 10, 11 years? Because the market's different, right? You may not agree with that, but again, if you want to prove me wrong, put it in the comments. But again, what happened after 08's crash, right? The Fed came in, boom, took it over. The Treasury, right? Took over everything, right? What else started having place? The options market just exploded, especially after 2020. Retail investors hugely more into the market than before. Okay, algos, all this stuff is so different than that stuff you didn't have in the 50s and the 60s and the 70s, all that stuff, right? You're not getting some certificate for buying a stock anymore, right? That's been gone. So it's just a different type of market. And sure, in 1950, maybe it was, sell in May and go away, but I think it's really changed. I think it's like sell at the end of July, maybe, into August and especially September and go away, whatever you want to say that. But I'm going to show it to you. And you decide for yourself. And there should be a certain pattern you see here going back 11 years in this, okay? And so let's take a look real quick. You decide for yourself. And when we look at this, you can first of all see that the last few days of July, August, September, again, can be rough. First, maybe 5 to 12 days of October as well. And so you see that in 2023, we got a nice sell down. Here we are in a major market crash, so we get one of these bear market rallies. But again, you'll see September is the worst month. I don't care how far you go back, but even just going back 10, 11 years, which I'm going to do, because that's really all I care about right now. And this has changed, right? It used to be sell man, go away, but now it seems like sell in August and go away, maybe even the end of July, right? You see 2021 right here, super bullish, right? Super bullish. So here's, that's the end of July. We come up, boom. Here comes September, though. Time to pee in your Cheerios, And so you'll see a lot of these, that 2-month span from August, September, maybe in early October, sometimes just end up flat, but it's super volatile. Like you'll see it's just super, super volatile, especially if you've had a strong May, June, and early July. It's even worse, right? Here's 2020 where they're pumping $7 trillion in our economy right here. Here's August, boom, moving up, and it goes up. Here comes September. See you later, pee in your Cheerios again, right? September is just horrible. And so again, this one ends up being positive. It does end up being a positive. But then here comes, early October to mid-October. So just rough, right? But you had what? A strong May, strong June, strong July, right? And so again, and that means if you have a weak May, June, July, maybe you have a stronger August, September, that kind of thing. But you can see this going back. Here's 2019. You just look at the chart and go, man, that just doesn't look very cool, right? I mean, you're going to end up going sideways. Again, it goes down in August, comes back up. Oh boy, here we go. And so again, we end up slightly red, but again, volatile, and especially if you're in options, unless you're in, well, you're just getting messed up all over the place if you're writing this and out on puts or calls. But you can look at this right here. Here's 2018. This one was actually really good. Why was it really good though? You always have to ask yourself this. You go, why was August? And again, it's very volatile. You see the big swings up and down. But when you look, wow, it's actually up, right? Pretty good. And then you go over to the right a little bit and you realize, oh man, we went through a market crash. This was the 2018 from October to December 24th crash, right? So what does the market love to do when it runs up into this? It loves to run up, right? It loves to get everybody in and go, okay, pull the rug. So that might be why that happens, because you won't see too many green or really, well, especially really green months or anything from August to September here. We got 2017, you can look at the chart and already go, well, that's not going to be very good, right? Again, super volatile, doesn't look great. Chart looks like crap, basically. Then of course we end up going up. Hey, great, we saved the day right here at the very last minute. And then the fourth quarter kicks in and everybody's loving life, right? So that mid-October to going into December. Then you go in 2016, again, it's going to be flat, super volatile. You see how it's going to sell down right there. And so again, not anything good going on there in the market, no surprise there. And then we go over to 2015, and we don't even have to measure this, do we? I'm going to do it for the fun of it, but man, here comes August. Here we go. It's like, oh boy, crashing all the way down, up, down again, down about 11% down right there. And so that was horrible. Not a good one. 2014, you come over here, you can see here comes August, the end of July and August, right? The last week of July. August, so it sells down right here. There's August starts right there, comes up, goes over. September, not too bad. I mean, September's basically flat, and then we end up slightly up about 1%. And then that first, you see the like October is not good going to that one. But again, you just see, pay attention to the last part of July, August, September, first part of October, and again, don't be out of it for November. It seems like, because that seems to be a really good time. Again, here is same thing in 2013. You know, you're going to go sideways, but it's going to be super, super volatile. Okay, I don't think we can argue that one one little bit. Now, things to watch out for. So that gives you, I believe, 11 years, right? Is you can use this right here to see, because we know we're super concentrated, right? These 8 stocks right here, which I'll show you. I put Abgo in here months ago, and I'll tell you why. But you see Microsoft, Google, Meta, Nvidia, all the Mag 7, Mag 8, whatever you want to call them. These are the heavily weighted ones, right? Here you can see it. They're in the top 10. And again, these 8 stocks make up 32% of the SPY ETF. Okay, 8 stocks. There's 502 in there, I believe, because you have 2 different Google types of shares and 2 different Berkshire Hathaways classes of shares. All right, but 32% for 8 stocks. And so again, you come over here, and you can look at this and pull it up and just sit there and say, okay, so you can monitor this. If this is going down, if these stocks are going down, the market's going down. So if it's setting lower highs and lower lows, the market's probably going down. Okay, you can pull the moving averages up over it. You can do whatever you want to do. Go back to any point in time where this stuff was selling down through, you know, late July through September, early October. And these weren't looking great, because if these are looking bad, you can guarantee the rest of the stocks are looking like crap. Now, pre-2020, it wasn't as bad, but it was still bad. All right, and so that's just the way it is. And again, you know, not only going into, you know, this one, you need to go into them separately. Like, you need to pull up, you know, Microsoft and look at it and see if it's setting, you know, lower highs and is showing weakness and things like that. I mean, again, we go back over here. You can see right here, it's selling down, right? It's setting lower highs, lower lows, right? You can pull up moving averages if you want to. You can pull up the RSI, which I highly recommend you do, because the one thing you'll notice for every single sell down on especially these stocks a lot of times is you're going to see, you know, bearish divergence and stuff. Again, because if it's going to be a short, you know, when I'm saying correction, we're talking about, like, you know, it can be 5%, 10%, whatever it is on the SPY or the S&P. But again, you know, here's your bearish divergence. This is what you're looking for. If the RSI is setting lower highs, you'll see these most of the time they're going to be setting higher highs, and then they roll over. All right, it's kind of that warning. And we can take days, weeks, whatever to find it out. But if you see it and you go, oh, okay, I got you, and then it starts to sell down, and then it starts breaking moving averages, right? But you're not just looking for one. You want to look for multiple of these things, right? So you're going to want to pull up Apple and Meta, and, you know, especially Nvidia now, that's for sure. But, you know, if you look at Apple, you'll see the same thing. I'm just going to point out the RSI part, right? When you look down at this thing, you can see clearly it's breaking moving averages, but look at that RSI below. That is bearish divergence, right? Building up for weeks right there, and it finally rolls over on you. Okay, and this is what we talked about. If you have a great, you know, May and June and hot July coming in, odds are, you know, and especially bearish divergence is forming on the RSI, it's going to be a rough one. And some are going to go down more than others, right? Nvidia held up pretty well. It went down 22% during that sell-off right there. It doesn't look like it. But again, bearish divergence going on for many weeks on this thing, many weeks. And then we pull up Google, and you can see right here, this one actually was going up. It was like the last one to sell off because money was rotating into this one. But what does it do? It forms bearish divergence on the RSI, and eventually, finally, capitulation rolls over. Not a huge sell-off for this one, because this is where money was really rotating in this one, because it had been beaten down. It was lagging and stuff like that. You pull up Meta, This right here was another one which held up decent, right? But it's another one. It's got RSI divergence going on, right? And then it sells down. That's just the way all of them show the same thing. So you see this. So you learn a couple of things here. And so we get to end up moving down. So if these stocks move down, the market is moving down. So hopefully you kind of saw a pattern, right? Where it's like last couple of days of July, August is like September, whew. And then early October, like the first 5 to 12 days can be really iffy. But then what do you see after that? If you have a bad September, especially early October, what happens in November? Whoo, you don't want to be out of the market for that, right? And then even early December, right? Even running into the end of December. So definitely don't want to miss that. But the good thing about this information is it doesn't tell you to do one thing, it just lets you be informed so you can decide if you're loaded up on options, especially call options. Man, you don't be riding those things, do you? In that time frame, you're like, whoa, boy. Or if you like to hedge, gives you an idea. Say, hey, maybe I'm going to hedge. Maybe the VIX is going to be spiking during this time. Whatever. Do your own research on that. Maybe I'm up massively in this one stock. Maybe I want to shave a little bit, right? Just in case. Especially, I think the one thing you have to see, though, is are we running up into this time period? That's really the big thing. If you're already moving down, it's not going to be as bad, right? But if you're running up in May and June and July, the market likes to pull back anyway, and it sees this soft target, and then maybe that's what's going to happen. So anyway, I just want to at least start the week off of that and put that out there to you and stuff like that. And again, if you like these kind of videos, feel free to sign up for the membership. I do 2 of them a week, less than a McDonald's combo, by the way. Okay, and so and you get your morning news brief with all the stuff you can imagine, from the breadth to the daily options ranges, weekly option ranges, the most important news, all that good stuff. So anyway, hope you got something out of it. Please hit the like and subscribe button on your way out, and I'll see you guys tomorrow.